Hello traders, Greg here with a market update. Okay, so we've just had the first day of trading for July and also the first day of trading for the third quarter of the year. Now look, we have had a slow start to the week trading wise. Look, equities are at record highs, but we haven't seen a momentum push higher from those record highs yet. And I imagine, look, equities in the last couple of months, they have come a long way. They've done a lot of work. So seeing equities, take a breather, I guess is no big surprise. Waiting, I guess, for the next catalyst to move them. But look, it is worth noting again that July is seasonality, a very positive month for equities. Last 10 years, it has been July has been positive every single month for an average return of 3.5%, 3.4. So S&P with a price of around 6,200, you are looking at potentially end of July targets up to 6,400 if it goes on average. Now look, we have had a little bit of news overnight. We've had some tariff news. So Trump does not look like he is going to extend the deadline for reciprocal tariffs on July the 9th, which is next week. So whatever countries haven't made trade deals will get those reciprocal tariffs in effect. A couple of countries worth noting at the moment. India is super close to a trade deal, if we believe the headlines, and they will get in before July the 9th. But Japan, unfortunately, the trade talks have stalled. And there's no chance of Japan reaching July the 9th with a deal. So Japan will get those reciprocal tariffs of 30 to 35% on July the 9th. Obviously not good for Japan. The market equity markets did sell off a little bit on the back of the tariff deadline not being extended. But it seems as if we do have tariff exhaustion in the markets. Whether it's good or bad news with respect to tariffs, we're not seeing any big meaningful market moves. Some other news overnight as well, it's I guess important, is Trump's big beautiful bill was passed by the Senate, and it's now been passed to the lower house, and they will vote on that today or tonight in US time. Trump is obviously desperate to get this bill on his desk for July the 4th, Independence Day holiday, to sign that. So what does that mean for the markets? Look, if you believe Elon Musk, he says that this is probably the worst bill in American history, that it is super irresponsible, that with American debt at record highs and continues to grow, and then this bill with its tax cuts and its spending is going to only add to the debt spiral that the US is in at the moment. I guess what we'll have to wait for is actually to see how the bond market reacts to this big beautiful bill, because that's probably the most important market that will react to this. If the bond market feels that this is super irresponsible, it'll drive bond yields higher. Bond yields higher certainly is a risk negative, so that could have a feedback loop into other markets and equities. But if the bond market does not react, we don't see higher bond yields, and that the market is happy to kick this debt story down the road and trade it for another day, then no doubt I'd imagine that the sugar rush that this big beautiful bill is going to give to the economy, equities potentially could rally on this bill being passed. But look, that's probably a story for next week. But a story for this week is on Thursday. That's non-farm payrolls, second most important economic data besides CPI that comes out every month. It's not coming out on Friday this month, it's coming out on Thursday because July the 4th is a holiday in the US. The market is expecting around headline number to come out around about 110,000, and unemployment rates will remain steady around that 4.2%. If this number comes out as below expectations, no doubt we're going to see a very angry Donald Trump. We're going to see him communicate in no uncertain way to Powell, saying he needs to drop rates immediately, and he's not doing a good job. Look, no doubt we'll see bond yields lower, and we'll see the US dollar get hit very hard on a miss. And obviously the market's going to start pricing in that the Fed meeting in July certainly is live for a rate cut. On the other hand, if we do see this number come out above expectations, then no doubt we're going to see the opposite, that Powell will be vindicated, that job market is still solid, and that he does being patient and not cutting yet is probably still the right path. You're going to see bond yields a lot higher, and we've got a market at the moment that is super short US dollars. US dollar this week just hit a 3-year low. Everyone is selling US dollars like crazy. So I'd imagine if we see a beat on this number on Thursday, you're going to see a huge spike in the US dollar. So look, either way, no doubt, on Thursday, we're seeing a quiet market. Probably a good reason for that is they're waiting for this non-farm payrolls print, and we are going to see some volatility on the back of that, and probably some decent directional moves. So until then, good luck with your trading, and we'll catch back in with you shortly.